Hi and welcome back to Cheeky Crypto. My name is Nick and today we are going to be jumping down into the crazy world that is crypto. We've seen the market move quite a bit. I'm actually on the road, so I apologize for the poor audio today. Essentially, I'm just in the hotel room on a road kind of basic mic, so apologies for the audio, but let's jump right down into the technical analysis of Bitcoin, take a look at what is going on with this recent pullback, why those altcoins are bleeding out, and what is potentially in store next for Bitcoin. So as we can kind of see here, only going to take a brief look at smart money concepts today. As I said, I'm in the hotel room, don't really have access to the full rig of what I'm used to, but as you can kind of see, we've pulled back quite a bit. This isn't anything terribly too unusual. We were expecting a move down towards 25,711 to 25,950, but we actually find ourselves moving down just a little bit deeper than this. So this is starting to look a little unusual, and you can kind of see that we kind of have the potential for a much bigger move to the downside still. Do expect a couple of kind of relief rallies from time, but it does look like we have a significant surge to the downside to be expected here. So if we take a look, we can see that we have got our change of character. We are still in a bearish state of play. This is something that occurred over here on this candle on the 5th of June. We can see that in the last few hours, we've just got a break of structure, which is basically confirming that we are in a bearish state of play. Okay, this is probably really poorly written. I don't like the idea of something called BOS, break of structure, when really it's a continuation of the structure that's already formed, but that's just terminology. So the break of structure we see right here is confirming our change of characteristic right here as well. Now as we kind of jump into this little area, we can see that we've got this fair value gap. Okay, so I'm going to just remove my yellow box from here. We don't need this one. We'll do is we're going to draw another one in here, and I'm going to highlight this fair value gap. Okay, so we're going to just add this in right in here. So this fair value gap was created from large selling pressure. Okay, another imbalance in the order book between these two key levels. Okay, so it's important that we understand that between the price of 25,808 and 26,266, there was poor liquidity. Okay, so at the high end here, we notice that basically there's a lot of selling pressure, too much selling pressure that there's not enough buyers to meet the demand for selling. Okay, and so that doesn't actually happen until we get down here, where we find a little bit more on the buying pressure that balances the market a little bit. So we have this imbalance in the order book, okay, between 25,808 and 26,266. And essentially what this means is this is a fair value gap. Now you find that when price pulls back like this, we should start to cool off and we should gravitate back up here and we should fill this gap out. However, considering the reasoning and the rationale behind why the market is moving the way that it is, we should consider the fact that maybe we're going to see a little bit more downward pressure before we fill this out. We will eventually come back up here and we will grab this area, but I'm not expecting it to be right away. I would expect a small move up. We'll probably come into these ranges a little bit, move back down. So if we take a look at it from an Elliott wave theory point of view, we can see that we are very impulsive here, and there's a couple of different ways of looking at it, and I think I just drew that in the wrong place. We'll probably start here. We see that we have this kind of structured move here, but this is very corrective in itself as well. This isn't giving me huge confidence to think of this as a 5-wave drop without probably an irregular flat or something going on in here. For the ease of the video, without kind of taking this too long to kind of record this video because I have poor internet connection, I think it's probably best if I just go 1, 2 down here for 3, 4 and 5, so you kind of see the idea. It's probably not the right wave count. I think I'd have to kind of scrutinize what's going on here in a little bit more detail, but it kind of gives you the idea of kind of where my mind is at on this one. Now if we kind of zoom out of this a little bit further, we could then start to see, okay, well, do we have a wave 1, wave 2, wave 3, 4 and 5 situation occurring right in here? And this will be really interesting because as we kind of start scaling this out, we can see that we had this 1, 2, potentially 3, 4, and then 5, and we already know that we are on these other impulsions as well, happening from up here 1, 2, 3, 4 and 5, right? And so all we're really doing is still confirming everything that we've been talking about for the last few weeks, and these moves to the downside, although people don't want to acknowledge them and they don't want to hear about them, unfortunately are kind of all been bedded in for the last few weeks with these structures that have been emerging. And it's always been possible that we have the impulsions taking us down, and it's also been possible that we end up with these zigzag patterns that are also nest in double zigzags, triple zigzags, and things like that. And I think with these recent moves that we're seeing here, with more 5-wave structures appearing, it's getting clearer and clearer that we might be leaning more towards the impulsion taking us down quite deep. Now, if I bring this up into our daily time frame, you have the fair value gaps, right? And it's no coincidence that we're looking for that 200 EMA at the back end of our first fair value gap on the daily time frame. So we are, of course, talking 25,167 to fill this one out. The 200 daily EMA comes in at 25,260, and so we can, of course, see this fair value gap get filled out whilst finding support on that 200 EMA for a bounce to the upside. So it looks like we should be expecting further downside, but we should find brief support and a brief rally at some point in the near future. It is still technically possible that we rally on up more towards the kind of 30K area, and maybe even towards that CME gap at 34 to 35K. But for now, with everything that's going on, it looks like we should probably be very cautious with going long. I think ultimately our structures are very clear that we are bearish at the moment, at least on those smaller time frames. The daily time frame could find support and could rally, but it's yet to be seen. So a little bit of caution there, but for the most part, I think we've seen the altcoins bleeding out quite a bit on the back of Bitcoin's movements. So Binance being sued, Robinhood delisting coins because of the SEC and all that kind of stuff. So lots of things going on, lots of opportunity in the space, in my opinion. It's always important to build those positions out whilst the market is in a state of fear, and that's exactly what I intend to do. I would be buying in the market right now if I wasn't on the road and actually had access to my crypto. When I'm on the road, I do not have access to my crypto, so I won't be able to make any purchases and take advantage of this market. But I do hope that you guys are taking advantage of what is in front of us right now. I'm going to leave this video right there though, guys. Just a brief update as to what's going on with Bitcoin. If you have found it useful, smash the like button. If you are new, subscribe, and guys, I will catch you all in the next one.